Hi everyone, welcome to Bond Bytes, the daily bond market highlights from INR bonds. I am Arjun Patsati, and in today's market, in the government bond auction, government 10-year gsec yield came down slightly to 6.34%. The Sensex Nifty fell again today and are trading at below 60,000 levels. They are down from record highs, and then this correlates directly from the fact that if you see the chart on the left, which is the dollar index chart, the dollar index is a index of the USD against major currencies, predominantly the euro and the Japanese yen. And we see this dollar index has risen very sharply in the last 2 months, which indicates that the dollar has strengthened against the euro and the yen. And this shows that there is a bit of risk aversion in the market. And that's one of the reasons why the Sensex and Nifty are falling. Now, the question is whether this is positive or negative for government bond yields or gsecs. In one way, it is negative because if there is risk aversion in the global scale, then normally India as an emerging market sees lots of capital outflows as foreign institutions sell in equities and bonds, and this takes up the rupee. This takes down the rupee, and this adds to inflation. And the RBI may be forced to raise interest rates, and this could help. This could make the gsec yields rise. But on the positive side, with Sensex and Nifty falling from record highs, there could be a shift from the equities to gsecs, and gsec yields could fall on safety in the Indian market, and RBI could maybe not look to could look to stabilize financial markets by keeping interest rates low and liquidity very high in the system. So it works both ways, and we would have to see how RBI looks at the whole scenario if there is a lot of stress in the market. On the corporate bond side, Vedanta is looking at demerger, not delisting, and this clearly has an impact on its bonds. There are a lot of Vedanta bonds, both in the domestic and the offshore market. And if there is demerger of the entities of its different businesses, then where do the bonds stand? Does the bonds of different businesses go to each business, or does it go down to one company? So there are a lot of questions, and rating agencies will, if the Vedanta goes ahead with demerger plans, they will put these bonds on rating watch. And with the implications, whether positive or negative, still not very clear. Thank you very much for listening in. Do not forget to come to our Quick Invest platform to invest in bonds with the most information, most transparency, and the most easiest of investment processes. And the link in the description below gives you access to Quick Invest. And if you're not subscribed to a YouTube channel, please do so. Thank you very much for listening.